Hey everyone, and welcome back to the Deep Dive. I'm Nick,
And I'm Pi.
and today we're diving into something that's been really puzzling me lately.
Hmm. Yeah. I think you're going to find a lot of people are puzzled by this as well.
You know how I'm always messing around with these financial models,
Mhm.
trying to figure out, where the market's going,
Right.
and something's just not adding up.
Oh, so the models aren't matching what's actually happening.
Yeah, like I'm looking at all the usual economic indicators, GDP and all that,
Eh.
and it's painting one picture, but then, I look at what's happening on the ground, and it's a totally different story.
Yeah, you've hit on something that I've been digging into too. I've been looking at global GDP figures, and let's just say I've found some things that might explain why you're feeling a little bit off.
Really?
Yeah.
Okay, so tell me, what's the deal with GDP? I mean,
Yeah,
is
yeah,
it
yeah.
is it really as simple as it seems?
Well, on the surface, it seems pretty simple, right?
Yeah.
It's the total value of all the goods and services produced in a country. Supposedly a snapshot of the nation's economic output, but when you actually look at the calculations, things
Yeah.
get a little bit more complicated.
Okay, so where do those complications come in? Is it just that different countries calculate it differently or
Well, there are definitely variations in how countries calculate it, but the real issue I found is more about inconsistencies in the data itself.
Okay.
So for my analysis, I focused on data from the World Bank,
Oh,
starting from 1992 onward.
why 1992? What's special about that year?
Well, that's when China adopted the system of national accounts, or SNA,
Right.
which is like the international standard for GDP calculation. I
Uh-huh.
wanted to make sure we're comparing apples to apples.
Makes sense. So you've got this standardized data set. What did you find?
Well, I compared the officially reported GDP figures for countries like China and the US with the GDP I calculated based on their reported annual growth rates.
Okay, remind me, how does that calculation work?
It's pretty simple if you know a country's GDP in a given year and its growth rate for the next year. You just calculate the new GDP basic math.
Right, right.
Okay, so here's where it gets interesting.
Okay.
For both China and the US, there's a massive difference between the calculated GDP and the official figures.
Okay, give me some specifics. How big are we talking?
Okay, so for China in 2023, the officially reported GDP was $17.78 trillion.
Okay.
But my calculations based on their own growth rates put it at only 5.7 trillion.
Wow.
That's a gap of over 200%.
So you're saying China's economy might be a lot smaller than we think?
It's a possibility we need to consider.
Yeah.
And the US isn't off the hook either. My calculations put their 2023 GDP at 13.27 trillion,
Yeah.
which is about half of their reported 26.7 trillion.
Okay, so both China and the U.S. have some explaining to do, but before we jump to conclusions, could this be because of other factors like inflation or exchange rates?
Yeah, those definitely play a role. But
Yeah.
even after taking those into account, the magnitude of these discrepancies, especially for China, it's just too big to ignore.
So it's not just some, statistical noise or minor adjustments.
Yeah.
It seems like there's something more substantial going on.
Exactly. And to see if this was a pattern or just a quirk with these two countries, I ran the same analysis on other major economies like Japan, Germany, India, the UK, and France.
And were they fudging their numbers too?
Interestingly, no. For those countries, the calculated GDP figures were much closer to their officially reported numbers. Typically within a 10% margin of error, nothing like what we're seeing with China and the US.
Okay, so we've established there's definitely something unique happening with China and the U.S., but the big question is, why is someone deliberately messing with these numbers? And if so, what's the motive?
Well, that's the million-dollar question, isn't it? And it leads us to some fascinating research by Professor Luis Martinez from the University of Chicago.
University of Chicago, huh? I bet he knows a thing or two about economics, so tell me more.
Well, Professor Martinez specializes in studying the relationship between political systems and economic data, and his research has uncovered a pretty interesting pattern.
Okay, I'm on the edge of my seat here. Spill the beans. What did he find? Okay, so last we left off, you were telling me about this professor at the University of Chicago and his research on political systems and economic data.
Right, Professor Martinez. And he found that governments with more authoritarian tendencies often overstate their GDP growth, sometimes by as much as 35%.
35%? That's a huge margin of error.
Yeah.
But why would they do that? What's the point of inflating GDP numbers?
Well, it's all about perception. Inflated GDP figures create this illusion of economic strength and stability. It's a way for these governments to kind of project an image of success, both to their own citizens and to the rest of the world.
So it's kind of like a PR stunt, a way to boost their image on the global stage. But wouldn't other countries catch on eventually? I mean, these discrepancies can't stay hidden forever, can they?
You'd think so, right? But remember, these governments often control the flow of information,
Right.
and they can be pretty good at spinning narratives that, suit their interests.
Yeah.
Plus, GDP calculations are complex. It's easy to get lost in the weeds.
Yeah, I'm starting to see how this all fits together. We've got these discrepancies in GDP data, particularly for China and the US. And then we have this research suggesting that some governments might be inclined to inflate those numbers for political gain. It's a pretty compelling argument.
It is, isn't it? And it raises some serious questions about the reliability of economic data and the potential for manipulation.
Definitely. But let's get back to your analysis for a second. You mentioned that the discrepancies were especially pronounced for China and the US. Did you notice any other patterns in the data?
There's one finding that I think you'll find pretty interesting. Remember how everyone's been talking about China overtaking the U.S. as the world's largest economy?
Yeah, it's been a hot topic for years. Some analysts say it's only a matter of time before China claims the top spot.
Well, based on my calculations, that might have already happened.
Really?
If we use the adjusted GDP figures, taking into account the potential for inflation,
Yeah.
China's economy would have surpassed the U.S. in size as early as 2016.
Wow, that's a game changer. So the official narrative about the U.S. still being the world's economic leader might be based on inflated numbers, and China might have quietly taken the lead years ago. That's a pretty big deal.
It definitely challenges conventional wisdom, doesn't it? And it highlights the importance of looking beyond the headlines and digging into the data ourselves.
Absolutely. But let's not get too caught up in, who's in number one. The real issue here is that these discrepancies could really distort our understanding of the global economy.
Exactly. These inflated figures can have real-world consequences, impacting everything from investment decisions to government policies.
So what are some of the specific implications of these findings? How might this affect investor confidence, for example?
Well, if investors start to doubt the accuracy of official GDP figures,
Yeah.
they're likely to become more cautious, especially when it comes to investing in markets where there's a higher risk of data manipulation.
That makes sense. Why invest in a market if you're not sure the numbers are telling the whole story? So we could see a shift in capital flows, with investors moving their money to markets that are perceived as more transparent and reliable.
Exactly, and this could have a ripple effect on global financial markets,
Uh-huh.
potentially leading to increased volatility and slower economic growth in countries where investor confidence has been eroded.
It's like a domino effect. One piece falls and the whole structure starts to wobble.
A very apt analogy.
Yeah.
And it's not just investor confidence that's at stake. Governments also rely on GDP figures to inform their economic policies.
So if those figures are inaccurate, it could lead to some pretty bad decisions.
Exactly. Governments might end up allocating resources inefficiently
Right.
or implementing policies that are based on a flawed understanding of their country's economic situation.
This is getting a little unsettling. It
Right.
seems like these discrepancies in GDP data could have really far-reaching consequences impacting not only financial markets, but also the effectiveness of government policies.
That's the reality we need to face, and it underscores the importance of developing a more critical and discerning approach to economic data.
Okay, so we've established that there are potential problems with relying solely on GDP as a measure of economic health. But where do we go from here? Are there other indicators we should be paying attention to?
That's a great question, and one we'll be diving into in the next part of our deep dive.
Sounds like we got even more to unpack. We'll be back after a quick refresh to explore some alternative economic indicators that might paint a more complete picture. Welcome back to the deep dive. So we've been talking about all these potential problems with GDP and how it can be manipulated. But now I'm curious, are there other economic indicators that we should be paying attention to get a more accurate picture of how an economy is really doing?
Yeah, there are actually quite a few. While GDP can be useful, it's important to remember that it's just one piece of a very complex puzzle.
Okay.
It doesn't capture everything that really matters for well-being and progress.
So what are some of these alternative indicators and how are they different from GDP?
Well, one that's gained a lot of attention is the Genuine Progress Indicator, or GPI. Unlike GDP, which just focuses on, economic output,
Right.
GPI takes a more holistic approach.
Holistic in what way?
Well, it factors in things like environmental sustainability, social well-being, income inequality, even things like the value of household work and volunteer work. It recognizes that, true progress isn't just about bigger numbers, it's about creating a better quality of life for everyone.
That's a really interesting way to look at it. So instead of just measuring how much stuff we're producing, it's trying to assess whether that production is actually making our lives better and whether it's sustainable in the long run.
Exactly. Another indicator worth considering is the Happy Planet Index, or HPI. And this one focuses specifically on well-being and sustainability.
Wait, there's an index that measures happiness? How does that even work?
It combines data on things like life expectancy, experienced well-being, and ecological footprint
Okay.
to assess how effectively countries are creating happy and sustainable societies.
So it's not just about how much money a country makes, but about how it uses that wealth to create a good life for its citizens while also respecting the planet.
Exactly. HPI challenges that traditional growth at all costs mindset
Right.
and encourages a more balanced and sustainable approach to development.
GPI and HPI. I'm adding those to my economic toolkit for sure.
Yeah.
But are there any of the, more traditional indicators that we should be looking at with a more critical eye?
Definitely. Take inflation, for example. While it's a key economic measure, the way it's often calculated doesn't really reflect the real cost of living for most people.
Yeah, I've noticed that myself. It always seems like the official inflation numbers don't capture how much prices have actually gone up for things I buy regularly.
Yeah, it's important to look beyond those, aggregate inflation figures
Okay.
and really examine how price changes are affecting different income groups and different regions.
So we need to dig deeper into the data to really understand how it's impacting people's lives.
Exactly. Another area to scrutinize is employment data. The official unemployment rate often doesn't capture the full picture of underemployment and gig work and people who have just given up looking for jobs altogether.
So the numbers might show low unemployment, but that doesn't mean everyone has access to good jobs that pay a living wage.
Exactly. It's essential to look at metrics like labor force participation, wage growth, and the quality of jobs being created.
We need to move beyond just counting jobs and really look at whether those jobs provide a living wage and opportunities for advancement.
Right. And finally, we can't forget about income inequality.
The gap between the rich and the poor.
Exactly.
Right.
Metrics like the Gini coefficient can help us track how income and wealth are distributed within a society and how that distribution is changing over time.
So we can see whether the benefits of economic growth are being shared fairly or whether the rich are getting richer while everyone else is struggling to keep up.
That's the idea. By looking beyond GDP and considering a wider range of indicators, we can get a much more accurate and nuanced understanding of economic health and well-being.
It's like upgrading from a blurry snapshot to a high-definition panoramic view of the economy.
It is. The key takeaway here is that economic progress is about more than just boosting GDP.
Right.
It's about creating societies that are prosperous, sustainable, and equitable for everyone.
Well said. This has been a truly eye-opening deep dive into the world of economics and the importance of looking beyond the surface.
Remember, the numbers only tell part of the story. It's up to us to ask the right questions and use this knowledge to create a better future.
Couldn't agree more. Until next time, keep those minds curious and those data processors humming.
Yeah.
This is the Deep Dive signing off.